Hi friends, Simit here from InformedTrades.com. Today is Thursday, June 26th, 2014. Time for our daily Forex chart review. Basically, in these in this session each day, I share the trades I'm placing, adjustments to existing positions that I put on in markets, all as a part of helping traders learn. You can learn from my successes, learn from my mistakes. We can all learn together. If any of the information I'm presenting is unfamiliar to you, check out InformedTrades.com. We have a huge archive of learning material designed for traders of all levels, of all backgrounds. Focus on all markets, all time frames. Check it out. Share your knowledge. Ask a question. Set up a trading account. Practice trading account. Share your trades. We can all learn together. Okay, let's get started with a look at the charts. Here is a chart of gold. So gold has gone up to 1325. Right around there. So you see on the screen right now, you see it's still at the top. It's at the top of the range, or went at the top of the range, met resistance, and today we have a relatively large down day that sent us from about 1318 to about 1308. Or actually, well, here we go, day's range, 1320 to 1308. So 1% move down in gold today. Pretty big move. Shows the bears were in force. Also, this is the 200 exponential moving average, this lime green line here. If we close below that, that may also bring out some more bears. So we're still in this range. Overall, I think it's still a good buying opportunity for the long term. I'd actually like to see a larger price drop to facilitate buying, or I don't mind if price stays a little depressed as I finish up accumulating. If we close above 1326, I think it's a major level for bulls, and for bears, really getting back below 1280 is key. If we just stay between 1280 and 1320, I think we're pretty range bound. Okay, so that's gold. Bitcoin. Yeah, not much new. Actually, the one new thing is we are at the 50 simple moving average. Let me switch into the logarithmic view here. We are at the 50 simple moving average. Price is bouncing off that. We're still above the 50% retracement line from this swing high to this swing low. So I think this is still an interesting buying opportunity. I bought about $40 lower, $50 lower, excuse me, right around here. So that's and I think if price goes back there, it's an interesting buying opportunity. If it falls below that, if we get to 500 or so, then I think the bears are really in control. But till then, I think this is a pullback in a uptrend, or at least risk reward. In terms of risk reward, I think that's a favorable way of looking at it on the daily time frame. Okay, one adjustment I made in terms of my existing trades is actually closed out my Aussie Kiwi trade here. And the reason I did is that one is the price action here isn't too favorable. We went kind of far below. We established a new low here. I was hoping that this was the this was the checkmate here on June 18th, but price actually went lower yesterday. So that's not so good. Also, I think it was a mistake for me to put the trade on to begin with, as we're below the 50 simple and 200 exponential moving average. So price did rally to almost break even. I did lose slightly on this trade, pretty insignificant loss there. But I didn't think that it met the criteria and the new low, so I thought it'd be better to just close this one out. So Aussie Kiwi, I did close out. That's the one adjustment I made today. No new positions are being put on. My Aussie Swiss position, or this is not get filled. This is still a pending order. It looks like it's not going to get filled. It's long. I'm set to go long here at 83.56. Price came very close yesterday to filling it within 1 or 2 pips, but it didn't. Ultimately, didn't fill it. So I missed out on that opportunity. Nothing you can really do about that. I'm just not in that. We'll see. It might come back. If some sharp move happens today or tomorrow, it might come back and get filled, but it looks a little unlikely. Lastly, the one trade I do have on at the moment is Euro Yen. Short 138.6 at 138.65 with my stop at 139.05 and the target profit at 137.15. The yen has been in a very tight trading range of late. There's definitely a tight trading range like this often portends a breakout, increase in volatility. So I think this is a good time to enter. To me, the signs are definitely in favor of a bearish move more so than a bullish move. But we'll see. I think the Japanese economy is at a major inflection point. The Bank of Japan is talking about withdrawing their stimulus. So we'll see. And I think that's part of why the markets are a little frozen related to the yen now. But that breakout is coming. And I think it's worth taking a small amount of risk to speculate on the short side, in my opinion, based on the technicals. Of course, long term, I'm still very bearish on the Japanese yen, and I'd be interested in finding a good level to buy at when the price looks like it's a good opportunity. That's about it for the trades I have on for today. My adjustments to positions basically boils down to just closing out my Aussie Kiwi trade for a small loss. I didn't really see any other opportunities that I wanted to pursue at the moment. If you have any questions, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.